Hey, wealth builders, Simon Dixon here, and welcome to Bitcoin Hard Talk episode 15. We go live every Friday where we discuss hard talk about hard money. I've been involved in Bitcoin investing and money for the last 20 years, and that's the geeky side of money so that we can build and protect our wealth. And this week, we're going to be discussing a couple of parts. So, firstly, we'll go through all the latest in the macro side, Bitcoin, geopolitics, and everything for the first half hour. And in the second half hour, we're going to be discussing a topic I get asked a lot. In fact, for over the last 12, where are we now? 12 years since I first discovered Bitcoin. Probably someone has asked me this every week for the last 12 years. Will governments ban Bitcoin? So we're going to be discussing that. What is likely to happen, especially in a world of central bank digital currencies? Does Bitcoin compete with CBDCs? What's the difference? We're going to be discussing everything tonight. So let's jump straight in with the first half. So just before I get started, do me a favor, hit the like button. That will help more people find this. Share this on social media. We want to help as many people build and protect their wealth and prepare for a world of Bitcoin and central bank digital currencies. The proof of work network, Bitcoin, versus the proof of weapons network, which is fiat currencies. That's what we discuss each and every week. And it dawned upon me this week that it was almost just over 10 years ago, a decade ago, that the Winklevoss twins, who famously sued Mark Zuckerberg from Facebook, Meta, whatever we call it now, because he claimed that they stole his idea, and they settled for approximately $65 million. And instead of putting it, they got a bunch of Facebook shares as well, which was a great settlement. But they also got the $65 million and put it in and got revenge on the fiat currency world and the Silicon Valley world by putting a chunk of it into Bitcoin. So they were partying in Ibiza, and Charlie Shrem, who was an old school Bitcoin guy, he did some time because he was an early Bitcoin exchange and got on the wrong side of the law when some people that were using the dark web were using his service, BitInstant. And he found the Winklevoss twins had invested in the company, and they had a big, fallout. But they ended up buying a chunk of Bitcoin and creating the world's largest multi-signature wallet. Most secure wallet, where they went around all the different states in the US. They did it as a paper wallet, this ultra secure setup where no technology and no systems exist. In future videos with the ledger hack that we're having at the moment, some hardware wallets have been hacked, so you've got to be careful. And I'll go through in future videos how I manage securing my Bitcoin, where at some point next year, I'll make sure we create some of that content for you as well. But anyway, it was incredibly hard. When we were first involved in Bitcoin, it was really hard storing it. And now lots of really good tools exist to make that easier. But they had to go around all these different state banks and chop up their private key and engrave it on certain bits of paper. And they went all around the world. And shortly after accumulating, I think it was a couple of 100,000 Bitcoin, which was the largest trade at the time, which made them the first Bitcoin billionaires. They wanted to launch a Bitcoin ETF. And an ETF is just an easier way for people to get hold of Bitcoin through their pension, through their retirement funds, through the large pockets of money that are going to have access to it most likely in January. The head of the SEC, Gary Gensler, came out this week and said that because of some of the court rulings with different areas in cryptocurrency, he's going to have to take a very close look at approving the ETF. And it is forecasted that it may be approved in the second week of January, between the 5th and 9th of January, because that is the deadline to approve it. Otherwise, it extends to a further period. I've got an open bet with Rob of Digital Currency News. If I don't get that approved in Q1 2024, I said that it would happen. He said that it won't. Then I've got to actually wear a I Love Maszynski t-shirt, who's the scam artist that scammed $3 billion out of 650,000 people. And I was one of the largest creditors in that case. And I've got to wear that. Otherwise, he's got to wear it. So We've been bantering a little bit on Twitter around that one. I don't normally like to bet, but betting on a t-shirt seems okay to me. Right. So it was 10 years ago that they wanted to create that Bitcoin ETF. Now imagine for the last 10 years, Bitcoin has averaged approximately 117% returns per year, the highest performing asset class in history, and the regulators didn't approve it. So they protected pensioners from owning the highest performing asset class in history for the last decade. Imagine what a difference that would have made for those coming to retirement age right now, who instead, yeah, they put it in the stock market. And the only reason that performed is because they created Ponzi economics that we call the proof of weapons network, the US dollar. So when Bitcoin was created, they reduced interest rates right down. They performed quantitative easing. And due to the Cantillon effect, which is the closer you are to the central bank, you get to pump money. Who pumps money? Those that borrow against their stock, that have public companies to push it into the bond market and they push up their stock. And so pensioners got a bit of a ride because of quantitative easing. But what if quantitative easing doesn't happen anymore? Let's discuss what's been happening in the macro side. So anyway, Bitcoin outperformed it. And so, they protected, they gave themselves an average of 20%, 10, 20% from the stock market pump and dump Ponzi scheme through US dollars quantitative easing, but they could have had 117% through the stock market, through the Bitcoin ETF market. Well, the regulator successfully protected all pensioners from that scenario, but it looks like in 2024, we are likely to get that Bitcoin ETF. That means that all the large pockets of money, there's been a lot of talk around Harvard University and people having to retire because certain things that they said. Whether that was anti-Semitic or, all those different debates that are happening across these universities, because people that are pro-Palestine, that are anti-genocide, are actually getting censored right now. And obviously, there's a lot of debate around what people should say, what they shouldn't say, as we move into the freedom of speech platform, Twitter, which also seems to be siding and taking a certain stance. So it's a very confusing time, but at least we have this freedom of speech that we seem to be having. And at some point, YouTube, I'm sure, is going to take down these videos, depending on if we speak too much of the truth. And so we've been backing them all up. Don't worry about that. But the Bitcoin ETF, so it's likely to happen, and pensioners can then do that. It also means that when they put it in their pension, it's got to be backed up by Bitcoin, which will be held in a little startup that we invested in through Bank to the Future, which was shares in Coinbase, who's going to be custodying all of these Bitcoin for the largest pockets of money. BlackRock's, Fidelity's. BlackRock is the multi-trillion-dollar monster. There's going to be about 10 of these ETFs, and it really does change the game. But, better late than never. And remember, every single year since I've been involved in Bitcoin, everyone has said it's too late. I've missed the boat. And every year they miss out on the highest performing asset class. You got to hold it for the 4-year cycle. I'll continue on why that's important. But the US government literally got out of the way until now. They can finally get out of the way and allow pensioners to protect themselves. But there were a couple of other acts which are very predatory from the US government this week. One of them is FTX was a massive scam. It went into bankruptcy. Sam Bankman-Fried likely to spend the rest of his life in prison as a result of, there's about $40 billion of claims against that company that they owe to creditors, and he lost about $8 billion. Some of the AI investments that were made may make creditors a little bit whole, but who comes along? The US government, the IRS, the Inland Revenue Service comes along and says, we want $25 billion ahead of scam victims. So they're applying in court with the US bankruptcy code that has authorized the legal spending of client money, which is illegal under any other circumstances. Remember, in order to spend client money, you have to have a banking license, and then you have to subscribe and all of the fractional reserve banking and everything we talked about on many, many shows. Well, when you actually custody those funds, because Sam Bankman-Fried just spent it as if it was, money that he could spend, and that's why he's going to prison and committed that fraud. But now the U.S. legal system rubber stamps it and says, we'll spend $350 million on all the vultures and lawyers and professionals to try and stimulate a little bit of lifeblood and injection into the vultures in the Chapter 11 bankruptcy code. Then the IRS says, we want $25 billion ahead of the victims. So you get your money scammed. The IRS says, we want it. The bankruptcy code says we can spend it. And now they got to fight for their life just to try and get the money back that they're being scammed out of. And the same interesting thing is happening in the Celsius bankruptcy as well. Celsius was a massive fraud. It basically, the US government came along and said, we want to help creditors. So we're going to put, the state regulator said, we'll put about $4.7 billion of claims in, but we got it where it was negotiated that the victims get paid first. However, there's a scam in this Chapter 11 process, which is that when a company goes into bankruptcy, you lock in the price of those assets when it goes into bankruptcy. This means that all benefit of Chapter 11 goes to the company that scammed in the first place. Because Bitcoin goes up in value and has gone up significantly higher, almost 150% since that bankruptcy, they can sell all that Bitcoin, give all the upside to the US government, and the US government can put some Bitcoin on its balance sheet, much like many of these bankruptcies. This famously happened in 2014 when there was a big exchange that went bust, Mt. Gox. They lost 90% of victims' Bitcoin, but the price of Bitcoin meant that they got paid many, many times over in dollar value that took it out of bankruptcy. So when you have hard money in this equation, it's fascinating how these bureaucratic processes built by the government is normally built based upon the value of the proof of weapons network, fiat currency, always destroying your wealth. When you put an asset like digital hard sound money in the way, you end up breaking the system. And then the benefit goes to the government, which is the Federal Trade Commission in the case of Celsius. Now, if we get out of it in time before Bitcoin goes up enough, then we get to keep that benefit. But it's just fascinating showing how all of these systems were built upon the proof of weapons network. And when you put something where you put savings back into the equation, it kind of really messes up the process. But of course, they rubber stamp spending $250 to $350 million of victims' money and a year and a half in order to try and get us out of it as well. This is what happens when you run a US dollar Ponzi scheme, which was previously a GBP Ponzi scheme, which was previously a Dutch guilder Ponzi scheme, because fiat currencies, when you outsource the ability to create money to the private banking system, you always end up with more debt than money. When you have more debt than money, the money to pay the interest doesn't exist. So you continually roll over the fiat currency Ponzi scheme until eventually wealth inequality gets so great because those that don't buy assets end up deep in debt on credit cards and all sorts of stuff to those that bought the assets or are closest to the central bank. And those closest to the low interest rates can charge the high interest rates. You put that over a whole lifetime, a 100-year cycle, and you end up with a debt bomb, just like we are experiencing in the US right now. They have a $27 trillion economy on $33 trillion of debt. That is unsustainable, and we're about to reach the point where just the interest on servicing that debt is about to pass $1 trillion. So if you're in the middle of a Ponzi scheme that started to get inflation because you're printing so much money, what do you do in order to manage that debt if you're looking to fund the proof of weapons network and you need to get more taxpayers to spend more money and you need to borrow more with US bonds, you need to find a way of making that debt cheaper. So you play interest rates. So officially this week, Jerome Powell, the head of the Fed, said we are returning to Ponzi economics all over again. Forget inflation. It's no longer a problem. All we need to do is change a little few figures in the consumer price index and make it so inflation doesn't look like it's a problem. Despite the fact that everyone else that is deep on debt, on the verge of bankruptcy, that can only afford 1 month, and they have to get their entire family to work in order to live the same standard of living that one person could have got before, you still need, and you know that inflation is still a problem. So what do they say? We are happy. Jerome Powell came out. We are happy. Inflation is now under control. We have manipulated the numbers. And so next year, we are anticipating 3 rate cuts. What does BlackRock do? What does all the large pockets of money do? They say this is a green light signal for the markets again. Everybody pile into the stock markets. Everybody start borrowing against your stock. Everybody roll over the Ponzi scheme again. Let's keep going. Roll up, roll up, roll up. And we have 3 rate cuts ahead for you to put those interest rates down, and screw it. We'll start taking on those assets. We'll start doing some quantitative easing all over again. We'll start making everything look fine. Let's pump the market. Let's pump the money printer. Let's go all over again. In fact, screw it. Let's just rage war. Genocide Joe Biden then goes on and starts condemning more around what's happening in Russia, saying, we have not seen it yet. US troops fighting Russian troops. We need to borrow some more money. So let's get the military bill out there. We need to fund Genocide Joe to blow up more children and fund and send some more money over to Israel, which is getting worse and worse and worse as we watch it on our screens in the proof of weapons network, so that we can pump it up, roll it over, get some more QE, justify it. And guess what? It's elections next year. What do? 3 rate cuts. We need to pump the Ponzi a little bit more so that I can then say, when Trump's coming along and saying, this is the worst economy ever. What happened during this economy? We had a pandemic, and we had Ukraine, we had Russia, we had hyperinflation, we had unemployment, we had the worst economy ever because of Genocide Joe. And Genocide Joe says, let's pump some more money into the markets, let's manipulate the numbers, and let's roll over the Ponzi so that when Trump comes into power, which is looking more and more likely again, we can then pass that debt bomb. He can pretend that he's doing something different. And again, they just pump the US dollar proof of weapons network because it is systemic. Nobody can beat that system until you get a central bank digital currency and switch your way of organizing the economy from free market debt-based to debt-free currencies, where you give significantly more power to the government, connect it with the digital ID, connect it with the central bank digital currency. And every single day, America looks more and more like China, and China looks more and more like America. And the whole world meets in the middle with a central bank digital currency. Get used to it. It's coming. It's inevitable. It's predictable. It's guaranteed. But make sure you understand hard money. Now, remember what's happening with the banks at the moment. We saw this year. It was just this year when Silicon Valley Bank blew up and Silvergate Bank blew up, and the other banks blew up, and we had JP Morgan coming in. And then Jerome Powell says, we have tools. We have tools. FDIC doesn't have enough money, but let's try and figure out a new tool. So they roll up, they create a new tool where banks can get access to borrow money if they need to. And where are we at right now? $650 billion of mark-to-market losses on banks' balance sheet right now. These are the assets that are propping up the entire US banking system. There is only 1% of the money in FDIC. The only way to roll this away is to decrease those interest rates so that banks can look healthier, and therefore you can take that $650 billion and make it look a little bit better. But how are we going to solve that one next? Well, we need to ensure that those treasuries that are going down in interest rates so that we can stimulate and make the banks look healthier. Let's introduce some new laws. Basel III. Basel III is the third iteration of how do we roll over the Ponzi scheme and make banks look more healthy. We require them to have more assets. This is closer and closer a system that requires more debt because there's more debt than money to survive. But let's recapitalize those banks. We can recapitalize those banks by requiring them to have more and more assets, because what happened this year, we can't afford that. So remember, we are rolling over. So they want to make it more healthy. That means a significant contraction in the economy. Remember, you can only have, if you want to have more growth, you have to have more debt. If you want more money, you have to have more debt in the proof of weapons Ponzi scheme. If you want less money and less debt, then you have to have less debt. And that creates the business cycle and deflation and all the problems. They want to increase those reserves throughout 2024 to 2028 at the same time, which means that they are moving to Basel III moves us closer to a few percentage points towards full reserve banking. Why? Because they can experiment with this, they can recapitalize them, because eventually, when the Ponzi scheme, when we end up at the final, it's the systemic risk event, whatever that is, we can then get closer and closer to a central bank digital currencies, and it's easier to wipe out those banks in the middle because they're the ones that are creating the debt-based Ponzi scheme. So this is why we end up in the 4-year cycle, because we are just pumping debt to make the numbers look better ahead of the election, so that when you've got 4 years, you can then blame it on the next party and you can try and make things a little bit better. This is why whoever Satoshi Nakamoto was understood, and it's just crazy how this was all known, the 4-year cycle. So the proof of work network does the opposite. While the proof of weapons network has this 4-year cycle of rolling over Ponzi scheme until the fiat currency has significant contraction, and then you have really large, warfare as we transition to people using hard money in between as the next Ponzi scheme emerges, and the next world reserve currency happens time and time again. And so that's why you have that 4-year cycle, and Bitcoin comes along and does the opposite, says we're going to half our supply of how many Bitcoins get created and rewarded to miners that verify every single transactions, and they get some new Bitcoin every 10 minutes. There's only about 1.5 million of them left. And therefore we share the fees for transacting on the Bitcoin network with the miners. And then they repurpose electricity, the most elegantly designed monetary policy in order to have an apolitical movement where you can exit from the politics of the crazy money printers rolling over their Ponzi schemes. Speaking of which, Argentina got their new president. The new president says they win the election because we're going to get rid of the Argentinian central bank. What's the first thing he does? Well, hopefully he's moving towards getting rid of the central bank, but instead devalues the currency by 50%, which means that you immediately, with the strike of a button, wipe out by 50% everybody's savings and double the prices in order to try and control runaway inflation. For those of you that do not live in hyperinflation, believe me, it sounds like a word, but it is the most destructive force. Look at what's happened in Lebanon. Lebanon took on too much of the International Monetary Fund debt slavery. It ran out of US dollar reserves because it needs dollars in order to repay its IMF loan. And instead, it starts printing its own currency. A corrupt government comes along, starts stealing all the money. The US dollar reserves go to zero. They run off. The central bank collapses. And then you have different types of groups that need to come along and govern that economy. And now we're starting to see the conflicts that are happening between Israel and Lebanon on those borders as well, because the US dollar proof of work the proof of weapons network drives you into these types of trends. And so we start to get hyperinflation. Is not a good idea. It's not pretty. It's not what we want. And how we doing for time? 5 minutes more until we go to the second half. And then you get extreme austerity. Now, extreme austerity is what you have to do if you're not going to roll over the Ponzi. If you can no longer print currency, you have to have the world reserve currency. And the only alternative is to borrow it from whoever the printers of the large economies are, which then brings us into you choosing between the economic hitmen that the IMF and World Bank, or assassination if you try and actually get back to more Austrian economics, less Keynesian economics. You get your 4-year election cycle. If you survive that, everyone votes out because they're like, well, we blame the whole destruction of the economy on you because it's a drug, it's systemic, and no one can beat it. No one can beat the fiat currency Ponzi. So you have to figure out how to exit with the opposite, the counterculture, the counter monetary policy, which is what Bitcoin designed and Bitcoin created. Okay, what else have we got? So this is why IMF debt is another thing, but there is a new contender in town. $1 trillion, that's one with a T, has been lent by China following the identical model to the International Monetary Fund. So everyone's talking about the problems in China right now. China has excessive debt. It's all systemic. It all works together. But they've been using the IMF policy of making out these predatory loans. And rather than going through, and you have all these economies that they went through all the, the 5 whammies. Remember when I created the video series, the Great Depression of the 2020s? It went through all these events that happened. We had obviously COVID. Then we had Ukraine and Russia. Then we had natural disasters that wiped out, poor countries like Turkey, where their central banks were failing. Then we had inflation. Then we had excessive printing of money, which destroyed their economies because they've got all this dollar debt. Then they go to China. They try and borrow more there. Then this leads to the blowing up of their banks, which then creates more wealth inequality, more problems. And who comes along? The private sector. What did we see? For example, we had the hedge funds will come along. They'll only renegotiate a deal when the government or the IMF is willing to backstop that. So what you tend to happen is you have companies, for example, like BlackRock, the largest pool of money in the world. They will essentially they'll do private creditor loans. And the IMF will then come along and say, well, we'll bail you out. So essentially, just like we had in 2008, BlackRock, they were actually the algorithm behind why to let Bear Stearns go bust, whether to let Lehman go bust, whether to bail out and lend money to JP Morgan so that they could then benefit from these things. That was BlackRock's algorithm that was guiding the Federal Reserve in order to make those decisions in the 2008 financial crisis. BlackRock comes along, puts out all these private loans in these countries that are being crippled by US dollar debt, and they compete with the Belt and Road Initiative and the IMF. But they say, don't worry, the IMF will bail it out if it goes wrong. So we will underwrite BlackRock's loans. And so you end up with the private creditor market rather than restructuring. Sustainable hard money is based upon having savings where you can save your money and you don't necessarily need to invest it to maintain your same level of wealth. If you save Bitcoin, if you save gold 5,000 years of Bitcoin, if you save gold 5,000 years ago, your wealth is still the same today. It preserves your wealth. Now, because Bitcoin is digital hard sound money and people haven't figured that out yet, you have these asymmetric returns because more and more people are figuring out until eventually it gets as boring as gold, but it puts savings back into the economy. And so when you do that, you have hard money, which is sustainable. And then you have sharing. That's what equity markets are for. That's what the stock markets are for. Not predatory restructuring, whereby a country can go bust. Excuse me. A country can go bust. And rather than sharing success and failure, which is what the equity markets are for, you end up succeeding if you can get the government to restructure the debt. And even when they are predatory, the country can go bankrupt. The IMF can implement its policies. They agree to put together a proof of weapons network, foreign policy, military operation in their country, and they end up in the middle of a proxy war, a proxy war playground for foreign policies in America, which eventually, when their economies get destroyed, when they print too much money, when they end up in a hyperinflationary cycle, they end up having to print that money and then destroy their wealth and on the wrong side of financial history. That's what we don't want to happen to you. And this is all because of the fiat currency Ponzi scheme. And so rather than actually, you have a bailout of the hedge funds and BlackRock, just like we saw in the financial system, in the 2008 global financial crisis. So rather than restructuring it, you end up with just guaranteeing the debt. This is where you have like G20 countries, and China's doing exactly the same right now. The private lenders are then bailed out by the government lenders. And once that stops working, you roll it over. And eventually, the only thing you can do is deleverage the economy by printing up a central bank digital currency, which won't be backed by debt, and switch from free markets to more communistic ways. And this is all because we didn't listen to Austrian economics that said, spend less than you earn, invest the difference, allow people to generate wealth by genuinely having hard money. Hard money allows you to save. And as you increase your wealth, you're willing to invest it into the economy, share the risk. And when you share the risk, you either make high returns together rather than having the predatory fractional reserve banking system that comes a parasite to the economy, wealth inequality, and destroys fiat currencies every 100 years or whatever the average is right now. And then to roll it over, you end up raping global south. Sorry, YouTube might get us banned if we use words like that. I shouldn't say that. Violating, let's say, other countries where you use exactly what we discussed last week. Last week, we discussed how export warfare is used in order to allow for the debt to remain in the country that is borrowing the money. The money all come back to the world reserve currency. And as long as you can roll that over and people are still willing to lend to that government, you have the proof of weapons network that eventually gets bailed out by a central bank digital currency. Okay, so hard money and equity is the lesson. That's how I manage my wealth. I don't like doing these predatory type of structures that contribute to that system because we've got to break the cycle somewhere. Bitcoin's the best way to exit. And that's why I'm committed to preparing everybody for a Bitcoin and central bank digital currency world. Okay, what we're going to do right now, we're going to discuss the next subject. When there is a central bank digital currency, will they ban Bitcoin? Will they force you in to the CBDC world? Let's work through some scenarios. Okay. Azad, if you're there, just before we move on to the next subject, I'm going to take a quick water break. Do me a favor. Azad's going to pull up the screen right now, and you can head over to simondixon.com. And what I'd love for you to do is create a completely free membership over there. You can get a free digital copy of my book, the first published book in the world to include Bitcoin, which you can also get there, The Great Depression of the 2020s free video series, so that you're prepared for what comes next. You can even, if you're really geeky, watch backdated episodes of Bitcoin Hard Talk. But if you create that free membership, I'll make sure I email you every week with the latest things that are happening. What I'd love for you to do right now, if you're enjoying this content, before we go through the Bitcoin ban content, Do me a favor, like this video and put in the comments section what you would like to see in future videos and anything you want to put in the comments so that YouTube gets this out to more and more people. I'm going to take a quick water break. Please hit that like button right now. Please do share. And we'll be back very shortly with the second half where we're going to go through Bitcoin bans. Okay. All right. So Bitcoin bans. There are essentially 4 types of Bitcoin bans that we have experienced. Now, to give you a little bit of background, ever since I've been involved in Bitcoin, I bought my first Bitcoin at $3, and I made a commitment that every single month I will have more Bitcoin than I had the previous month. And the simplest strategy ever has allowed me to beat the shit out of the fiat currency proof of weapons network. It's also allowed me to have a percentage of that I can invest in more equity, and profit sharing types of ventures. Every time I used that and got greedy and got involved in some kind of leverage or debt, is wiped me out. And that's how I ended up in one of those scams. But fortunately, I've always managed it where even if I get wiped out on one of those investments, I've made significantly better on the other investments. And next year in February, I'm going to be doing what I do every single year. I'm going to be going through my Wealth Builder program where I share with you exactly how you can manage. That's available to anyone. And I'll be sharing more details if you head over to the membership site on how you can qualify to get that as well for free. We'll be releasing that. So make sure you're on the mailing list for that. Okay. Right. What did we want to cover? Let's check some of the notes. Okay, the different types of bans. Okay, so Azad's pulled up the website. That's simondixon.com. Hit that yellow button, and that will take you over to a page where you can create a username and login. Once you've got a username and login, there's a community on the Bitcoin Hard Talk membership portal. It's completely free, and that's how you stay up to date, get all the videos, get the books, get everything. Just make sure you got your login there because that's where I share all the making sure you're up to date and preparing you for a Bitcoin and central bank digital currency world. Okay. Back to my notes. Okay, where are we? So the different types of bans. So there are different types of bans that can happen. And the good thing is about Bitcoin is we have seen them all and how they play out already. So the first type of ban is what we call a mining ban. This is the dumbest ban in the world that any country could do. But some countries try and do it because they're so dumb. And the mining ban is essentially where you stop people from mining Bitcoin. And essentially, all of the mining, the proof of work, goes over to another country. China did it. It happened in this Bitcoin cycle, in the 4th Bitcoin cycle, the 4-year cycle. Early, I believe it was 2020, right in the first Bitcoin cycle or the second one in 2013. China saw it where Bitcoin was an opportunity to gain a competitive edge over US dollar reserves. So it was the first ever country that allowed Bitcoin positive documentaries to come out on national TV in 2013. Since then, it flip-flopped. It's already got its live central bank digital currency. It's already on the PBOC balance sheet, and it's already rolling that out. And you can see connected with a digital ID. You can see exactly how it's going to work in other countries. But one thing they did is they banned mining. This is a classic silly move. What happens with when you do mining? Well, mining is essentially repurposing electricity. So the government could just simply repurpose some of its electricity in order to gain some more of the proof of work network and benefit from getting newly created Bitcoins and put them on the government's balance sheet or the central bank's balance sheet. And when you put them on the balance sheet, you get to have that protection and that protection from the proof of weapons network in case you print too much or you end up on the wrong cycle of that. Every government should do it, repurpose some of their electricity into that. But what it essentially does is when you buy mining equipment, you're taking fiat proof of weapons network, buying equipment, investing in infrastructure, and it spits out Bitcoin on the other side, as long as you can have access to cheap and efficient electricity, and it allows you to repurpose that. Every country should be doing it. Every country will be doing it, depending on their access to electricity. But that's one type of ban. Now, the reason that that is a dumb ban is because rather than repurposing your electricity, what it tends to do is that when you have this system, people start investing in renewable energy, more efficient forms of energy, and making sure that excess electricity on your grid is repurposed towards generating Bitcoin, which is significantly more efficient than central banks in the proof of weapons network. And therefore, you have this ultra efficiency of making sure that you're driving the innovation in your country to the most sustainable and the most efficient forms of electricity in a free market way. And we have seen that, for example, when all of that China mining power, hash power, went over to America, America started innovating ways of repurposing electricity, how to get more and more cleaner technology, and pushing the barriers and barriers. And then El Salvador came along and said, we'll figure out a way of doing it based upon geothermal, volcano power, like we did in Iceland back in 2014, 2015, when we created cooling that would take the ice and the cooling climate, cool down the machines that are powered by electricity from volcano power. And then we created at Bank to the Future the first Bitcoin bond that ended up saving pensioners from the fact that the ETF was never approved, but hopefully that comes through. It was done on a small scale, but we've already seen that you can build a circular economy around savings, Austrian economics, and a wealth effect within your economy as a hedge, as every company should be doing, as every country should be doing, as every central bank should be doing, and of course, as you are doing and every individual should be doing by playing the 4-year cycles. Quick sip of water. Will I do that? Hit the like button. Also, if you're enjoying this content, make sure you get subscribed so YouTube can notify you. Hit the subscribe button, hit the bell symbol, hit all, and YouTube will send you an email. Now, the second type of ban they can do is the exchange ban. This is double dipshit dumb. The exchange ban means that you allow, this happened in China as well. So they banned the exchanges. Now, what do governments care about? Well, they want the data. So when you offboard from the fiat proof of weapons network, because of global anti-money laundering laws, all of the exchanges obviously have to comply with those laws. That means they need to know, they need to monitor transactions, they need to know who you are. Excuse me, the voice is going. And so when you ban exchanges, what happened? China banned it, and everyone went and opened an account with the Japanese exchanges and the South Korean exchanges. And they took all of that data that they're going to want for their central bank digital currency and digital ID rollout infrastructure, and you give it to another country. Imagine how double dipshit dumb that is. You take all the data that you need for your central bank digital currency by allowing people to buy Bitcoin through an exchange in your country, you give it all to somewhere else. And then you allow mining to continue. So people take their fiat currency, invest it in machines and electricity, and Bitcoin gets rolled out, but you don't get any of the AML data. Completely counterintuitive to what a country wants. Why do they want that data? Well, they say it's for anti-money laundering, but of course, it's because they want to do the money laundering. They want to provide the proof of weapons network. They want to be the financial terrorists. They want to ensure that everything's happening in line with their ideology, where they condemn one form of terrorism and then fund another form of terrorism, because that's what gets the proof of weapons network going. We already saw this. Binance was engaging in activities that it was illegal. It ended up with a $4.3 billion fine. The CEO goes to prison. It gets fined that $4.3 billion fine because they were funding the terrorists that America said you shouldn't. And then they put that in the big coffer, and then they send that over to Israel in order to perform and fund a government that's performing a genocide and another form of financial terrorism, but they're okay with that one. And so you go in this circular economy where you just categorize one form that you don't like and then say that this one's okay, same thing, but they obviously get to control that network. Every country wants to do that. So if you don't allow that to happen, you then don't get to tax it, which of course is another form of revenue. So why is the international revenue, sorry, why do I keep saying international revenue? Inland Revenue Service, IRS, HMRC, all the different tax collectors, they want the data, they want the tax, and so of course they're going to support the exchange. Why would they ban Bitcoin when there's this new source of revenue from all the wealth that's being created through digital hard sound money? They want to control the proof of weapons onboarding and offboarding. And if they ban it, it ends up going to another country and giving them that data and that tax and a non-competitive advantage. Why would any country be that stupid unless they've done the maths? So the exchange ban, again, is a complete fallacy. It's why we're seeing a regulatory crackdown to ensure that they can tax it, get the money in, and also support it, benefit from it, and get the data so that they can have that to subpoena it for the central bank digital currency rollout. So it's why the mining ended up a chunk of it back in China, and the exchange ban always gets reversed when people are that stupid. We see this. We've seen that happen again. We saw the flip-flopping in India. It's banned, it's not banned. It's banned, it's not banned. Because they ended up giving all the data to geopolitical competition. Geopolitical competition is what protects us from the Bitcoin ban. It is completely counterintuitive. It's like the war on drugs. What happens to the war on drugs? The federal level says it's illegal. The state said, we want the tax, we want the data, we want to regulate. Canada comes along and creates the next wave of multi-billion-dollar companies, and then all the other countries start adjusting to it. And so then you have to, fight that war. You get rid of the regulations. You get rid of the data that you want to collect for your CBDC network. And so it's a complete fallacy. And then you end up having to, the war ends up because it's just too expensive. It's too hard to run. You don't get the data. You don't get the tax collection. And so self-interest always prevail. Now, the problem is when it's done through crony capitalism. People make the mistake of thinking that capitalism is the enemy. No. It's when capitalism is combined with crony capitalism, which is when you can get close to the central bank. When you can get close to the zero interest rates, then you distort the whole economy, and then you have to exit. So they think it's capitalism, but we only have capitalism if you have hard money. You can't have the fractional reserve banking system and capitalism, because that is the definition of crony capitalism. And therefore, you end up with two-tiered economy. Let's call it a financial apartheid. The financial apartheid is the wealthy that control the central banks or close to the central banks. They gobble up more of the assets, more of the wealth. And those on the wrong side of it, they have a different set of laws. They have to pay 27% predatory payday loans or credit card loans in order to survive, in order to feed those on the other side of the financial apartheid. And then they end up ethnically cleansing them, where they end up having to wage wars that then ends up with refugee crisis. And the countries that are on the right side of the financial apartheid, they end up becoming racist and all sorts of stuff. It brings out the worst behavior in humankind. You end up with these racist kind of policies where we start to think, who's this invasion into our country as a result of this? And you end up building financial weapons and mass destruction by sanctioning certain countries and then raging wars in order to fund the proof of weapons network, all because those that control the money in a debt-based Ponzi scheme control the system, and therefore you roll over the Ponzi, and then wealth inequality ends up with war being raged, and then the ones that control the money printers, or the one that is closest to the financial apartheid, end up destroying their currency eventually, and you end up with civil wars, revolutions, external parties coming in, and it brings out the worst in humankind. This was mathematically figured into the equation. I covered it in my book in 2011, and I'll be covering the updated version in the book that I've been writing for the last 3 years now. So the exchange ban is completely counterproductive because you end up giving away the data and not taking the tax. The mining ban is completely counterproductive because you don't have this efficient market for electricity that allows you to repurpose and create significant improvements in those natural resources while building a hedge against your central bank's money printing. What other types of bans? Well, you can ban people holding it. And this is the one that America tried to do when they essentially Federal Reserve, FDR implemented the gold ban. They said it is illegal for Americans to hold gold. They said, let's set the price and we're going to confiscate all the gold from all Americans, and you have to put it in Fort Knox. We're going to give you a set price, and then we're going to remove the convertibility of gold. And everyone had to give their gold initially at about $20, then at about $35. And then when they released gold, they ended up with $2,000 gold, and they confiscated it from all their people. And obviously the financial apartheid got those that had to give up their gold into the debt slavery of the fiat currency system. And then they have to implement tax and inflation in order to try and keep that system. And it's why we all end up in a system where Jerome Powell comes out this week and says inflation is under control. We're going to do 3 rate cuts next year. We're going to pump up the scheme. We're going to roll it over again. We saw these types of things like in the 1984 Soviet Union. They banned all private ownership of foreign currencies. And so they wanted to push their own currency. This is where you end up with capital controls. Capital controls oppress the people within those countries, and you end up giving a bunch of, you end up on the wrong side of export warfare and all sorts of stuff. We see this in countries like Venezuela when they did a crypto ban, and other countries get a competitive advantage because they get on the wrong side of this. We saw it with China. They always end up reversing, or their economy gets destroyed. We saw the same in India, and eventually they end up opening that. This was Executive Order 6102 for those that are interested. Check out the Great Depression of 2020's videos if you want to see some of that. I did a whole video on about 5,000 years of monetary history in about 25 minutes to help you understand some of the trends that we're receiving right now. It always gets reversed because don't listen to the central bank. The central bank says we want to lower interest rates and pump money so that you take on more debt. But what are we doing in the background? We're accumulating gold. We know that hard money is what we want because the country with the largest gold to debt ratio are the ones that get a seat at the table when you end up at the monetary renegotiations every 100 or 50 years, between 50 and 100 years that it takes for a fiat currency to be done. And then another country says, we're going to get on the right side of that history. BlackRock obviously said the private lenders, they come along, they start lobbying. So what's BlackRock doing? Well, BlackRock and all the financial institutions say, we want to be involved in Bitcoin. And who controls the lobbying efforts? The wealthy companies, the money, those that are closest to the central bank. They say, we want Bitcoin now. We want Bitcoin as a hedge. So now it's invested into the traditional financial system. We can still exit. We still get the ability to own our own Bitcoin, to spend our own Bitcoin, to custody our own Bitcoin. And you get to the self-interest is why Bitcoin is this anti-fragile network that the more you throw at it, the more it reacts. The first to attack the exchanges are the ones that get on the wrong side of this. And it most likely happens to those countries that are last to adjust. They get on the wrong side of it. They start seeing other countries, and El Salvador comes along. They start to see, wow, the value of that Bitcoin that the government put on their balance sheet. Look at the price in terms of what's happening with the fiat currency as their debt's increasing in the proof of weapons network, and the value of the hard money historically has increased in that type of network. So you could try it, but competition changes it. Now, what if we get this global coordinated network of central bank digital currencies? Well, in 2025, the rules for how to back your central bank digital currency by Bitcoin and stable coins goes live into the Bank for International Monetary Fund. In future videos, I'll go through exactly how they've already written the rules for how that is going to work. They have already designed into the system that you can back the central bank digital currency by gold, stables, international debt, Bitcoin, and we will see the best central bank digital currencies will be the ones that have as little change. So the higher the ratio of backing of that central bank digital currency by Bitcoin could be the soundest form of central bank digital currency. And if you can prove that you have the soundest form of central bank digital currency, remember the old rules, those that have the gold reserves, the best gold to GDP ratio, have the most power. We could end up flippening the whole thing and having some countries that explore higher reserves of Bitcoin backing to their central bank digital currency, and they get a competitive advantage, and they end up becoming the next world reserve currency. And if they can stay out of the proof of weapon wars and do what America did in World War I and World War II, which is where they use their CBDC to fund the proxy war, but ensure that their country doesn't get blown up in the process. And then they flip their central bank digital currency where they don't need to fund the proxy war by backing a percentage of it by Bitcoin. And the more backing, the more sound that central bank digital currency becomes. Then globally, we can see, just as we saw in the 2023 bank run crisis, where we saw the price of stable coins adjust to the fractional reserve banking system because USDC had $3 billion in Silicon Valley Bank. It depegged and the market pricing went along because it could see that the rest was backed by treasuries. And as the government stepped in and said, we'll backstop the system, the price went more efficiently back. This is why they are petrified of stable coins right now. And that is what they're going to regulate first, because it is an attack on banking before the central bank digital currency is released. And it's why you are incentivized to regulate and control the CBDC, get the tax collection from the new wealth that comes from having digital hard sound money, and repurpose your country's electricity. And anyone with half a brain in government that has the right type of advice moving into the future will follow that rather than branding. You will have two types of countries. The countries where you have the rule of law, where they value freedom. And I know there's few of those today, but they value freedom of speech. The US is still protected by the Constitution, despite the fact that terror is used in order to take away all their freedoms, and you have draconian laws happening in wartime. But the countries that have the CBDC that protects the most amount of freedom, that is backed by Bitcoin or some part of it backed by Bitcoin, I believe will be the soundest forms of central bank digital currencies. And I'm not saying these are going to be good CBDCs, because they will still have negative interest rates programmed into them. They will still have the fiscal and monetary policy union, where based upon government agendas and goals, they will say we'll, be able to implement universal basic incomes, or we'll be able to take away and have compulsory vaccines, or we'll be able to say don't contribute to this non-government organization or this charity. They'll be able to define the laws and say we don't sanction this country for committing genocide, but we do sanction this country for defending against genocide based upon whether you're politically, ideologically aligned, while the IMF says we'll fund that through the proof of weapons network, give you the money, and we'll create an IMF predatory loan or a Belt and Road Initiative predatory loan to that country so that we can commit a financial apartheid and drop financial weapons and mass destruction upon that country so that their central bank destroys itself because it's not backed by Bitcoin and it's not backed by hard money, and it is destroying its world reserves because all the money ends up back in that country through the financial apartheid that we discussed and the ethnically financial cleansing and the financial genocide that happens when you take on that US dollar debt and you have to take on those dollars, but you can't print the dollars. And so your country goes through these financial apartheids. Rather than going through that, you could back some of your electricity by Bitcoin, and you could take a percentage of your CBDC and back it by digital hard sound money, just like MicroStrategy did, playing the stock markets and Bitcoin and hard money. And just like El Salvador did, and just like the world's going to see, and they're going to start to put together their strategy and their Bitcoin strategies. And just like all of the countries that are looking at the largest, the different types of countries that are looking at the right types of ratios, in the Middle East, they're all looking at Bitcoin mining. We just had the largest Bitcoin mining initial public offering on the Abu Dhabi Stock Exchange. The countries that embrace this the most in a world where probably central bank digital currencies aren't even going to be run by central bankers in the future. They're going to be run by artificial intelligence. They're going to be able to take the data that's inputting in, and artificial intelligence will know that sound money, digital hard sound money, is the way that you back the best central bank digital currency. And the country that gets the most data by allowing people to offboard from the proof of weapons network to the proof of work network is the one that will succeed in the future. So allow markets to prevail. Allow crony capitalism to be eaten up because of all the oppression that it creates. Allow digital hard sound money to prevail. Allow it to happen, and you may have the best damn central bank digital currency out there, and that's going to be the one that wins the race in outside of crony capitalism. That's going to be one where the financial technology will be the one that determines the future. Because guess what? We probably only got another 10 years of listening to these oppressive regimes. And what we put into Google right now, listen to me carefully, what we are putting into Twitter right now, I have faith. I have seen more initiatives from young people that are not being dictated to by media right now and are understanding that they're on the right side of history rather than traditional media making us think we all need to hate each other. So we put all that into the Twitter algorithm and the X algorithm. Sorry, I can't get out of that habit. And the Google algorithm, and the ones that are controlling those networks in the future is going to be training the next artificial intelligence. If we believe that we all hate each other and we need to believe that we need to be at war with each other because we're believing the media in thinking that we're all evil, and we allow these proxy wars to determine that for our future, what are we going to be training the artificial intelligence algorithms into the future? What are we going to be telling them when they're running our central bank digital currencies? What is going to be happening there? We need to train better things into this artificial intelligence. And anyone that tries to regulate that, anyone that tries to control that is going to be on the wrong side of history. Those that are looking at how can we control this, this technology is unstoppable. Bitcoin should have been stopped years ago, right in the beginning, when we were a group of schmucks and activists that were sat in that first Bitcoin conference in Prague discussing how we're going to take on the banks, and they're giving everyone the ability to own your own money, spend your own money, and counter and have Austrian economics on a blockchain to counter Keynesian and communism style of economics on the proof of weapons network. You should have taken it down while you could. But Satoshi Nakamoto mined those Bitcoins, and then it started getting bigger and bigger and bigger. And every time you attacked it, it got bigger and bigger and bigger. We've now got the biggest, largest, the largest decentralized monetary policy and the largest supercomputer in the world that no single government can attack. You can create a quantum computer. That quantum computer we may need to adjust to, because if you create that quantum computer and we create quantum resistant cryptography, we may have to change those miners. That is an opportunity for a country that decides that they're going to get those ASICs that are quantum resistant, because an anti-fragile network, because money you can own, money you can spend, money that has a fixed supply is a force for good. And you can't oppress good forever. And that is why this technology is allowing us all to communicate. But let's put better things into the algorithm, because that AI is going to be our future central banker. And what if our future central banker knew the damn truth? What if it wasn't crony capitalism? What if the artificial intelligence CBDC knew the truth of what was right? What if it was based upon principles? What if it was based upon ethics? What if it was based upon the counter to this? We have a critical moment in history right now. We can either go for more oppression, more control, more communism on a blockchain through CBDCs. We will get there. But this economy will eat it up, and not a damn thing that anybody can do about it, because Bitcoin is inevitable, predictable, guaranteed. CBDCs are inevitable, predictable, and guaranteed. You are alive at one of the most interesting times in financial history. You're either going to get wrecked by it by not listening to this, or you're going to be on the right side of change and the right side of history, and we're going to be doing it with peace, and we're going to be doing it with love, and we're going to be doing it with unity, or you're going to be on the wrong side of this financial apartheid, receiving ethnic cleansing through financial weapons of mass destruction on the wrong side of history. If you enjoyed this video, do me a favor, share it with everybody that you would like to hear this message. Hit the like button and let me know in the comments section what you would like to see in future videos, and head over to simondixon.com, where you can get access to all of the free content to stay on the right side of this change. That's going to be everything that we've got for Bitcoin Hard Talk episode 15. I will see you this time next week for Bitcoin Hard Talk episode 16. Peace.